If you're over 60, listen up, because the next few weeks bring 5 absolutely crucial money deadlines. And here's the thing, nobody is going to call and remind you about them. The most important one actually expires in a matter of days, and if you miss it, a door to a potential IRS refund closes for good. The rest of these deadlines, well, they can quietly drain money out of your fixed income all summer long, or leave you completely short on cash at exactly the wrong moment. Since none of these will flag themselves, I'm going to walk you through all 5 of them right now in this explainer. We'll stick to plain English, and we're starting with the one that's currently on the clock. So, here's our agenda for today. We're covering the July 10th IRS deadline, the new senior tax deduction, avoiding credit card surcharges, mid-year insurance premium checks, and finally, the SSI payment schedule trap. Make sure you stick around for that last one because it is a massive budget warning for anyone receiving SSI. All right, let's jump right into number 1, the July 10th IRS deadline. This one comes straight out of a real federal court decision called Kwong versus United States. Let me spell that out for you carefully because it really matters. Kwong, Kwong. Basically, the U.S. Court of Federal Claims ruled that the IRS may have improperly charged certain penalties and interests during the COVID disaster period. That specific period ran from January 20th, 2020, all the way through July 10th, 2023. We are talking about failure to file penalties, failure to pay penalties, and underpayment interest. If you paid any of those on a tax bill from that exact window, you might actually be owed money back. But here is the catch, and this is exactly why the date matters so much right now. The 3-year window to make your claim closes on July 10th, 2026. Now, the government is currently appealing the decision, which means the IRS isn't paying out these refunds just yet. So what you need to file right now is known as a protective claim. It simply preserves your right to get a refund if the courts ultimately side with the taxpayers. You do this using IRS Form 843. Just grab the form and right across the top, write Protective Refund Claim Pursuant to Kwong Case. Fill in the tax year and mail it in via certified mail. That way you have hard proof it arrived on time. Oh, and remember to file a separate form for each tax year. Now, just to be totally transparent with you, filing this doesn't guarantee you'll get a refund, but not filing, that guarantees you get absolutely nothing. The National Taxpayer Advocate, which is the IRS's very own watchdog, has been practically begging people to take action so everyday folks don't lose out to those who have expensive accountants. If you paid those penalties, talk to a tax professional this week. Seriously, don't wait until next week. Moving right along to number 2, the new senior tax deduction. For the tax years 2025 through 2028, the One Big Beautiful Bill created an extra $6,000 deduction for anyone 65 or older. And if you're a married couple where both spouses qualify, that's a $12,000 deduction. The IRS has confirmed this directly. The best part? It stacks right on top of your regular standard deduction and the existing senior add-on. Plus, you get this whether you itemize your taxes or not. However, there are 2 important things you need to know about this. First, there's an income limit. The deduction starts phasing out once your modified adjusted gross income passes $75,000 if you're a single filer or $150,000 for a married couple. Second, and this is exactly why July matters here, if your income doesn't have taxes automatically withheld, like from a pension, an IRA withdrawal, or your Social Security, this new deduction completely changes the math on your quarterly estimated payments. July 1st is the midpoint of the tax year, making it the perfect moment to recalculate. Think about it. If you overpay, you're just handing the government a free loan. But if you underpay, the IRS hits you with an underpayment penalty, and that rate has been hovering around 7 to 8% lately. Your next chance to fix any shortfall is the 3rd quarter deadline on September 15th. So do yourself a favor and run the numbers now while you still have time to adjust. Okay, let's talk about number 3, avoiding credit card surcharges. As of 2026, adding a fee when you pay with a credit card is completely legal in most states, and we're seeing a growing number of small and mid-sized businesses doing exactly that. In practice, that surcharge can be up to about 3%, though some states do cap it lower. Colorado, for example, limits it to 2%. But let's be real. If you're on a fixed income, a 3% hit on everything you charge is a serious leak in your budget. Luckily, avoiding it is incredibly simple. By federal law, surcharges are entirely banned on debit card transactions across all 50 states. So if you just switch to paying with a debit card or cash, you sidestep that extra fee completely. Now, if you happen to live in Connecticut, Massachusetts, or Maine, I've got good news for you. Credit card surcharges are still illegal altogether in your states. So if you see one pop up on your receipt there, you have every right to dispute it. Make a habit of checking those receipts, guys. That little line item is super easy to miss. Up next is number 4, mid-year insurance premium checks. Here's your game plan for this one. Pull up your July bank statement or your Social Security statement and compare your insurance charges against what you paid in June. If that amount moved at all, get on the phone with your provider and ask them this one specific question. Is this a permanent change, or is this just a one-time catch-up adjustment from a billing timing change? And always remember this. You are legally entitled to advance written notice of any change in what you pay. If they raised your premium and you never got a notice in the mail, you need to tell them that immediately. Finally, we've reached number 5, the SSI payment schedule trap. And please listen closely because this is an urgent one for anyone receiving SSI. Here's how the calendar messes things up. Because July 4th falls on a Saturday, the federal holiday is officially observed on Friday, July 3rd. As a result, anyone who normally gets paid on the 3rd actually gets paid early on Thursday, July 2nd. That covers people who started Social Security before May 1997 and those who get both Social Security and SSI. That part is pretty straightforward, but here is the critical trap for SSI specifically. SSI is normally paid out on the 1st of the month, so you'll get your regular July payment right on schedule on July 1st. But then, because August 1st also falls on a Saturday, your August payment is sent out early on Thursday, July 31st. That means 2 SSI deposits are going to land in your account in July. And here is the major warning. That second deposit is absolutely not a bonus. It is your August money just paid to you a day early. There will be 0 SSI deposits made in the month of August. None. Let me be incredibly clear. If you spend that July 31st payment in July, you will have absolutely nothing coming in for the entire month of August. You've got to set it aside. Treat that July 31st deposit as totally locked away for next month's rent, food, and bills. Every single year, this quirky schedule catches people completely off guard. When you're managing a tight budget, realizing this can literally be the difference between making it through August or falling behind. Okay, let's do a quick rapid-fire recap of those 5 action items. Number 1, file your protective Form 84-3 by July 10th if you paid those COVID-era IRS penalties. Number 2, recalculate your estimated taxes to account for that new $6,000 senior deduction. Number 3, start paying with debit or cash to skip those annoying credit card surcharges. Number 4, compare your July insurance charges to what you paid in June. And number 5, if you're on SSI, guard that July 31st deposit with your life. It is your August money. Just one last thing before we wrap up today's explainer. Keep in mind that this is general information meant to help you ask the right questions. It's not personal tax or legal advice. Always verify your own unique situation with the IRS, the Social Security Administration, or a trusted professional before making any big moves. The system isn't going to flag any of these deadlines or traps for you. But hey, now you know exactly what to look for. If you found this helpful, please share it with a friend who's over 60, because I can almost guarantee that at least one of these 5 things is affecting them right now. Thanks for tuning in.